All right, guys. Want to have a look over ETH here on the VWAP strategy, just to see how all the results so far. I put out this on the 11th, 11th of the 9th. So I'll start from here. It was a day after it or so that I released it, and then probably another day after before we actually started in the group. But anyway, I just want to look over it and see some results. I mean, we can do it on 2 to 2.5% risk. It is different. Everybody can choose what they want, what risk they want. From the back testing, there was some circumstances when if you had the 2.5%, then you would have had a higher percentage return. Of course, there were still them few losing days. Anyway, let's get started here. So you can see here, this is the 11th of September, right down here. So the market opened well right here, and it's dropping. So you want to buy an opportunity, and of course you hit your 1%, and your 2% was not stopped out. Okay, so I mean you could have held longer. We probably should do some analysis on how often it went way more than 1%, but that would need to be a separate video. How often do you get 2%, 3%, 4%, or whatever? Okay, so that was a winner. The next one, you can see the jump here. Well, the jump you want to be shorting. The stop was not hit. So, I mean, there's another, whatever, 5%. This pushed up on the 13th, 14th. You can see right here, actually. It pushed up, so you want to be shorting. Well, where did you short? This was one of the tricky days that, well, could have been a loss. It looks very tight anyway. If you added half here and added half on a bearish candle, your average would probably be somewhere here. And, you're cutting it very tight. Price did not even drop back down into VWAP. There was this stop hunt up here where you could have actually got short and maybe potentially raised, your average entry very slightly. The strategy was back tested in putting half just slightly above the open and then on the first bearish candle. So you could have done this one or you could have done this one. So it was very close, but probably no cigar on that one. It didn't work out perfectly at all. Um, anyway, well, this one worked out as we can see. I just want to speed this up a little bit. This pushed up. You want to be shorting off the open was right here. Shorting right at the open or slightly above it. Well, it did get that drop. You could have waited longer. You didn't get stopped out, and you would have got it later anyway. So there's another winner. 8 o'clock here, right here. 8 o'clock's my opening time. So you could have shorted. Sorry, you could have went long because it dropped. You could have went long here and added down here on a doji or whatever. There was potential to get your 1% out on that. It did roll over later, so it was a tricky day, but you definitely could have got your 1%. Here, obviously, it worked. It dropped, and we got a bounce. Again, nice 4% on that one. If we could work out a strategy for holding longer term and maybe getting 2, 3, or 4% bounce, it would be very good. Like, when we get these big drops, does that mean that we get big bounces? For example, this is a small drop, we got a small bounce. We got a big drop, a big bounce. Look at this big bounce, and we eventually did get a big drop. Like you were not stopped out. You can see here, you were not stopped out, but we eventually got a big drop. So again, big bounce means big drop. Big drop means big bounce. Big bounce, well, you got more than your 1%. You possibly could have got your 2%. So big bounce here, you could get more than 1%. Anyway, I'm getting sidetracked. We are here for the next one, isn't it? Yeah. Okay, so this dropped. The open was right here. So maybe you added on the open, maybe you added, you want to be going long, so you want to be getting down below the open a little bit. So here, and then there's your bullish candle. So then you add, and your average would have been somewhere about here, and you got your 1%. Because the strategy is backtested where you get the first clear bullish candle. and that's where you add to your position from the open, and you would have got it here, and then we did roll over. So next one here, this was actually the losing day from looking at this. Remember, there was a clear losing day. Well, we where's the open? The open's right here, so you would have half here. God, it's not easy to add anywhere here. Even that bounce, you would have had to nail the low right here for the 1% bounce, and if you had added on the open, you would not have got your 1% bounce. So I would say that's a failure. The one before was very touch and go. You might have got your 1%, but that's more of a failure. It's because it rolled over and dropped so hard. You mightn't have got your 1%, and then you might have got stopped out or whatever. It definitely was the hardest day so far. Again, we can see we dropped into this, and we got we got an 8% bounce. We dropped in and pushed straight up. Beautiful. We got the drop here again, and we got our 1%. Well, there is your open somewhere there, wherever you got in, 7%. So again, a big drop down, big bounce, big drop down, big bounce. Yeah, a big bounce up. I mean, so if you short it here, you're well there. If you short it here and added up here, your average entry would have been somewhere there, which meant your stop. I suppose if you were on 2.5%, you could have got, like, what I'm saying is you could have got the large drop. That's what I'm trying to aim for. The big bounce up meant there was a large drop coming at some point. Potentially, that's just in my head what I'm doing. But if you just wanted to get your 1%, the open candle is right here. So in theory, you want to be longing at the open or above, right there, and maybe you added somewhere up here, whatever, for your second half. You would have got your 1% because you can see it bounced up and you were at a loss of probably just 1% at a loss, but you definitely would have got your 1% there if you averaged in and stuck to the strategy. So it was a winning day, but what I was trying to say there is, you get a big jump up. At some point, maybe there's a big drop coming. Now again, we got, now, where's the open? There's the open right here. So you get a bounce up, you want to be shorting. Well, that was another successful day. Well, whatever, it was a winner. Is that right there? Yeah. So right there, from the open, well, regardless if you got to add anywhere, maybe added on this bearish engulfing candle right here or whatever, but it was a winning day, regardless. You might not have got your full allocation, but it was a winning day. So pop up, short, it was a winning day, 6% drop. This one was a pop up. Oh, this is a difficult one. But again, it's interesting. You get a big drop point, a big move up on the VWAP, and there was a big drop. Okay, so that's interesting. But you would have had to average in here. Where's the open? So the open is right here. 750. The open is right there. Okay, so you want to on the open. That was your first allocation. You can see it did well. If you just stuck with one allocation, you might have freaked out. But if you had averaged in, for example, there was the open, and then if you averaged in on a push up, you got this high volume node, for example, and you shorted above the high volume node up here. Your average entry, if you played it correctly, would have been about here, roughly. Now that depends if you had the proper. So your average entry could have been about there, and you can see it was about 2.15% at your maximum loss, and then of course you would have made your money then. So it was touch and go. There was, if you used that 2.5%, this is a good example. If you used the 2.5% risk again, you would have made money. If you had only entered a third of a position here and then entered your full allocation up here, waiting for the dip, you obviously would have been had a better average, and you would not have got stopped out on the 2%. So depending on how you played that, you could have still made money. Anyway, let's move on. So we dropped here, and I suppose the big drop this time didn't give a big bounce, but the open was this large red candle, was it? So the open was there. So if you added there and added on the stop hunt, you definitely could have got out at a, even there, even if you have a bad entry, a bad average is still could have been profitable. So it's a tricky one, not much movement and very choppy, but you definitely could have made money on it. So next one, we dropped obviously, and yeah, we made money. We didn't get stopped out. This was a drop. You can see the drop right here, and we made money. You would have only got your smaller allocation, maybe 0.5% or 1/3 of a percent, whatever way you done it. I mean, the backtesting strategy was 0.5%. Sorry, not 0.5%. Half your allocation at the open and half on the first bullish candle was the way the backtest was done. But you would have made money. This pop-up looked to be shorting. Yeah, right here. So, well, you could have made your money. You might not have got in your second half, but you definitely got your 1%. Pop up, you want to be shorting. So it popped up on this. There's your opening price right here. So the opening price right there, you can see you would have made your money. If you averaged in at all, you would have still made money and not got stopped out. So this one right here, yeah, looks to be profitable. I mean, there's the opening price, well, the opening price right here, but you're shorting because it pushed up. So if you short it in that 10-minute candle, you definitely could have made your money. 1.75% drop from that open. How was if you waited all day? Well, you can see again, there was a 2.5%. You can see it's just about 2.5%, and then it rolled over. If you were trying to get more out of your trade, for example, but you still would have made your money quite easily. The 1% quite easily off the open. Now that's basically it, guys, and that's back to today. And today was a tight one on the VWAP. It did push up. You can see it jumped right in there, and we called for that before the market opened. We called that the VWAP was below and we're going to jump up, and we did get the jump up. So the market open was right here. I mean, if you averaged in, I suppose, right here, you made your 2.8%. So far, now I should have turned these red on the bad ones because now I forget exactly what was the loser. There was one definite loser, and then there was two tricky ones that was a bit iffy. It was a lot harder to trade. So that's 22 days. I mean, there was one definite loser, and then two of them. I don't know if you want to say, even if that was a 6% loss, for example, on worst case scenario, you still would have been profitable overall. With the 3 losing days, there were still 19 other days. And the thing is, you could have made money on 1 or 2 of those kind of tricky ones. Now, correct me if I'm wrong. Maybe my memory doesn't serve me right. I should have made the bad ones red, just so we could look at them now. And there was even 1 or 2 days that we called on the chat that there was a bullish or bearish apex, and to be extremely careful and maybe not buy at the open or be very careful because it could go against us. So we did call that in the chat, and things like that can help reduce that risk and reduce them losses, which obviously improves results overall. Now, what I want to say is I think we should maybe look into strategy to see how we can get a bit of a runner. What circumstances helps us understand to maybe keep on a little bit of the position, because a lot of these days were 3%, 4%, 5%, 7%, 7%, 8%, 6%. You can just see a lot of these 6%, 4%. A lot of them could have gave a lot more profit. And if we could have a little bit of a runner, even leave 1/3% open, or a third of your allocation open, or maybe half an allocation open, it might actually over time negate the losing days, giving you an actual record of the 1% every day.